Mark, let me start with the European agenda because we're just ahead of the European Open. French futures are weaker. There could be a tariff perhaps on champagne, we hear, overnight. US stocks set to fall on Greenland, but of course they are playing catch up. This is one area of negativity that markets are dealing with. But then, of course, you layer on top higher yields in Japan.
Yes, I think there are two very big risk-averse events happening at the moment. The obvious one is Greenland is going to be a really slow-motion train wreck. I think the problem is here, kind of as Ollie outlined there, is there's no incentive for either side to back down. There's no incentive for Trump to back down from the hard line, and there's no incentive for Europe to kind of concede any major ground until the populace in Europe starts squealing on the economic front, which probably won't happen to at least those 25% tariffs in June. So we're going to take a while to price this because we're not going to get more aggressive lines from Europe. We're going to try find a diplomatic solution, but it's hard to see where that compromise comes. So that's the slow motion risk aversion. And I understand why people aren't overreacting at the moment, given the track record over the past year of Trump always chickens out. But there's less incentive there this time. The other more immediate concern, and the one I'm really concerned about because it's definitely been underappreciated at the moment, is what's happening in the JGBs market. 30-year JGB yields are trading 40 basis points above where they were on Friday. They're about to close the yields are about to close the highs today, about 27 basis points higher on the session. Now, this is really important because it has global macro consequences that will come delayed. When will they come? They'll come when JGBs find a floor. Now, I'm not sure that's going to happen. We're still a couple of weeks away from the election, and this is, we've talked about for a long time that JGB yields should ultimately be much higher. The country's got a massive debt problem and it's about to expand fiscally very aggressively. So it won't be a global problem until they find a floor, but that could be much higher. It'll be a domestic Japanese problem. But when they find a floor, Japanese investors own assets all over the world. If they have a chance to buy JGBs at, 40 basis points yields already over the last few days, but could be much higher yields, they're going to pull back money from around the rest of the world. That will blow up the carry trade as well. This is a large bond market, so the consequences here are massive and being underappreciated.
Just what happens next then? How does this? Just give me the implications for the Treasury market, the European government bond market, people's portfolios. Mark, when does this start? How seismic could this be?
I think this is very big, but I can't work out the timeline. Several people have asked me today, and I'm struggling to work out when it feeds in. What I will say is that I don't think it's immediate, because as I said, I think that the global impact is when JGBs sell off enough to find a floor, and that's when you get money back home. And I don't think we're close to that level yet. As I said, the election is still, almost 3 weeks away, and therefore we've got a lot of time for this to play out. And I think it's getting its own self-reinforcing dynamic. Who wants to go into this market right now? We're talking about the Bank of Japan having to hike maybe 3 times this year to defend the yen and the JGB market, which is just creating the dynamic even worse. So I think it's delayed for the rest of the world. It's Japan focused right now.